VP Harris gave her speech on economic policy recently. So let's pivot to our main topic today and talk taxes and estate planning and the potential changes that could be coming down the pipeline. Amanda, give us the lowdown here, please.
Yeah, well, settle in because we got a lot to cover here. She's pretty clear. Harris wants to raise taxes. So let's just break this down. Let's start off right off the top. She wants to raise the corporate tax rate right now from 21% to 28%. So easing in with it, not too bad. But she also wants to increase the taxes on capital gains and dividends up to 44.6%. So currently, long-term gains and qualified dividends, they're taxed at 20% right now on the high side. So that's a really big increase from 20 up to 44.6%. And I'm not taking sides here, but if Harris were to win, that type of an impact on capital gains tax, I could imagine that a lot of people may end up just locking in their current capital tax rate for this year, as opposed to risking a dramatic increase next year, which could result in a lot of selling come December. So that's something to keep in mind. You know, she also wants to tax buybacks, which are currently being taxed at 1%. She wants that to increase to 4%. She also wants to increase the Medicare tax, which a lot of our clients are very aware of, that 3.9% tax. She wants it to go up as much as 32%. And
wow.
I mean, she wasn't stopping there. She also wants to increase excise taxes on electricity and energy. And well, I mean, that's going to cause your utility bill to go up. It's also going to cause the prices at the pump to go up. So these are some pretty substantial changes if they pass. And of course, this is all speculative, but what I'm always saying is that elections bring uncertainty. So it's something that we have to be aware of.
Yeah, for sure. Well, I mean, we certainly have been getting more information to see a little bit more about what she stands for. And now she has to go out, I guess, and sell this, right, to people. So big changes in tax law, but you said even possibly bigger changes in estate planning. So enlighten us, please.
Yeah, so VP Harris, she's essentially endorsed the American Housing and Economic Mobility Act of 2024. That's her economic policy if she's elected. And what's really important to note is that this bill was introduced by Senator Warren. And so in my opinion, it is a bit of a radical reconfiguration of our current transfer tax system. So let's just start off with the wide lens view of it. This bill is proposing to spend over $500 billion over 10 years. And the ultimate goal that they're saying is because they want to build 3 million new housing units, which of course is a very noble goal, but we do have to talk about the funding of that. And it looks to be through estate tax reform, plus all those other taxes that we mentioned just previously. So I'm just gonna go through the big points from it.
Okay, well, let's hear it.
Okay, so the first thing that we wanna look at is that the proposal wants to lower the exemption threshold. And right now, your estate tax exemption threshold is at 13.610 million. And that's pretty high. Most people are not falling into that category where they would be exposed to estate tax, which would be 40%. So if your estate is over 13.610 million, anything above that would be assessed a 40% estate tax rate. They are proposing to drop that to 3.5 million, which we haven't seen it that low since 2009. So that's a really big drop, 13.610 million to 3.5 million. There's going to be a lot of people that will now be included in that for estate tax purposes. And the next part of it is that they want to change it to graduated rates on that estate tax. So if your estate is under 3.5 million, okay, there's no estate tax. But if it is above that, from 3.5 million to 13 million, they would like to assess a 55% tax on the estate instead of the 40%. And then if your estate is 13 million to 93 million, a 60%. And then households that are over 93 million, a 65% tax. So this can get very, very complicated for your planning, especially if you have businesses, corporations, you have generations that you're trying to fund for. And it also brings me to the next topic is generation skipping taxes. So this one is very, very big because they want to change it so that you are only allowed to include generations that are living. So everyone that's out there on social media, you hear these things about the Rockefeller plans and the Vanderbilt Vanderbilt. Well, guess what? That's what this would essentially wipe out, because anyone who's doing dynasty trust planning, you can't plan for great-great-great-grandchildren and all the legacy beyond that. They have to be alive in this type of planning. So that's a big one. The next thing is that they want to add a surcharge to high-income estates and trusts that have income over $500,000, even over $200,000. So if you create a trust and you leave assets and those assets produce income, and that income being produced from the trust is over $200,000 in income or over $500,000 in income, it can be taxed a surcharge of up to 8%, which is a lot. So that's something that you have to look at. You also have limitations on foreign tax credits. They want to change the annual exclusion for gifts. So currently you can gift someone $18,000 a year, and you can gift it to as many as you want. If you got 4 grandchildren, you're able to give $18,000 to each one of them. Also per family, so if you have a husband and a wife, they're able to gift to multiple people, and then their exclusion is up to that $13.610 million. They want to drop it to $10,000 a person, and they also want to cap it on $20,000. So if you have more than 2 grandkids, I mean, that could get a little dicey on which ones are getting which or how you spread things across. They also want to make changes to the grantor trust reform, discount limitations, interest on tax deferrals. So there's also hearsay out there, and even though this is not in the proposal that I just mentioned, they are heavily talking about eliminating the step-up in basis rule and also eliminating the tax on gains for gifting in this bill. So that would be a massive, massive change if they were to eliminate that specific tax law.
Wow, that is a lot to digest for sure. So just kind of an example here, does that mean if you wanted to give like your NVIDIA or Apple stock to your grandchildren, you would have to realize that gain, not gift it to the grandchildren like you can now? Am I getting that or no?
Yes, that's absolutely correct. So if they would eliminate that step up in basis or the tax on the gains from gifting where you would normally have that carryover basis, you would have to realize it. So a lot of people do that in planning, and they don't just do it for stock, they do it for real estate as well. So this could have profound effects on estate planning and wealth transfer strategies. And I mean, just the reduction in the estate tax exemption threshold back down to 3.5 million, you would have so many more estates that could be subject to this. I mean, I guess that's good for us as financial advisors because it would necessitate more sophisticated estate planning techniques to mitigate that tax exposure.